the agenda, we'll start with the case competition. This portion of the day will be moderated by Amanda Ward and Swapnil Gupta. So Amanda and Swapnil.
Thank you, Mariana. Hello and welcome to the 4th annual Emerging Markets Case Competition. This year, our case focused on the Indian pharmaceutical industry and the challenges we are seeing in generic drug production and growing protectionism across the world. We are very excited with the unprecedented participation we had this year. In our first round, 17 universities from 9 countries sent teams to submit solutions. We would like to thank all of these partner universities and their teams for all the hard work. They include Cornell University, Iim Ahmedabad, University of Technology Sydney, Iim Bangalore, Universidad de los Andes, UCLA Anderson, Iim Indore, University of Dhaka, York University, Iim Raipur, Iim Trichy, Iim Kozhikode, Somaya University, Tecnológico de Monterrey, Lagos Business School, Baruch College, and Yonsei University. We would also like to sincerely thank all of our judges in the first round who worked diligently to score all the teams and select our final 5 who will present today. They include Ari Bitov, co-founder and partner at Mission and Data and managing director for the advancement at Minerva Institute. Rutav Mehta, MBA and Master's in Healthcare Administration dual degree candidate at Cornell University, who has worked at Amicure Pharmaceuticals for the past 5 years. Christina Balayuri, CEO and founder of Sagestone Advisory, and Yao Chu, Assistant Professor of Operations, Technology, and Information Management at the Samuel Curtis Johnson Graduate School of Management at Cornell University. I would also like to make a special thank you to our alums, Swapnil and Gabrielle, who have worked countless hours to put together this competition and assist all of us current students in instructing us how it's done. So thank you so much for your assistance. I would now like to introduce our current judges for this final round. Please put your hands together for Ashish Mukherjee, VP and Global Head of Market Access and Pricing at Biocon Biologics, Dr. Sophia Kalansi, Lecturer of Economics at the Samuel Curtis Johnson Graduate School of Management at Cornell University, Soraya Camacho, Bachelor in Business and Law class of 2021 from UNADAS, Colombia, Harita Saranga, Professor of Production and Operations Management at Iim Bangalore, Muhammad Faud, and Assistant Professor in the Strategy area at Iim Ahmedabad, Peter Krieger, Senior Vice President at Bessemer Trust, Lorena Palacios Chacones, my apologies, Assistant Professor of International Business at TEC de Monterrey, Gopi Krishnan Sidharan, Associate Director of Market Access Pipeline and Launch Excellence at Novartis, Roberto Canizares, Reticent President of MSA International and member of our EMI Advisory Council. And we are again joined by our first round judges, Ari Bitov and Christina Balayuri. I would now like a huge round of applause for our final 5 teams, which are joining us from 4 different countries. Cornell University, the Iim Ahmedabad in India, University of Technology Sydney, Australia, Iim Bangalore, India, and Universidad de los Andes, Colombia. Today, each team will have 10 minutes to present their solutions, and then the judges will have 5 minutes for Q&A. Due to the tight time frame of the conference today, we will be sticking within these time limits. We wish all our teams good luck in their final presentation. And now, let's welcome our first team. Our first team today will be the University of Sydney. Please welcome our participants from Team SAS Consulting. We'll just give them a few minutes to filter in, and then they can start sharing their screen.
Yeah, so I'll share my, yeah. All right, I'll share my screen. Yeah, can everybody see my second screen?
Right now we're seeing a background, so I believe so.
Yeah.
Yeah,
So I'll hit F5.
Okay then, so let's start with good morning. We are team SAS Consulting and then we're from University of Technology Sydney. As mentioned, my name is Ying and I'm studying a Bachelor of Business, majoring in accounting. And then my other teammate Alan is also studying a Bachelor of Business and majoring in engineering. Finally, Shreya, who is not with us today, unfortunately, she's studying an MBA and then she is also majoring in IT. There's a little bit of tech issues, so we'll just wait for that before we continue. So, as you know, we are recommending for Indie Pharmaco to strengthen supply chain, and we're going to do this through multiple strategies. This is because there is a strong growth in the pharmaceutical industry. As you can see, there is a 4.6% CAGR increase. And the market share is constantly concentrated in the North American and the European region. However, we cannot discount the current markets that are developing in Africa, the Asian, and the Latin American region. As you can see, Africa is roughly half of North America. So there is strong growth potential and is a great opportunity for Indie Pharmaco to enter that market, gain a strong footing, and improve their profitability in the long term, which is they are intending to do. And then from these three developing markets, we have decided to focus on these emerging ones in the Latin American, Asian Pacific, and the Middle East African region. From the targeted markets, we have chosen to look at the year-on-year growth, indicating the overall market potential, as well as the OTC value, showing the over-the-counter value, so really the dollar value of the market. There is a strong increase in the over-the-counter value because there was an increase in the low to middle income earners in those regions. It is noted we have discounted Peru and Chile because it did not meet our current benchmarks. As well as that, we also discounted China because of the trade risks, and we wanted to reduce our reliance on it in the case that things go pear-shaped. And finally, we also discounted Iran for similar reasons regarding sanctions. And then from our narrowed down list, we further researched and identified the exports and imports of these countries, as the import shows the sort of aptitude for the pharmaceutical products, which Indie Pharmaco can really see their demand for it, as well as the export showing the current state of the pharmaceutical industry, which is important for Indie Pharmaco to understand whether they can gain a footing in that market and then push for that and gain profitability. From these narrowed down countries, we have again narrowed them down to look at their consumption index, their market growth, and more importantly, the supply chain risk. A high score indicates that there was low supply chain risk, meaning that it will strengthen the Indie Pharmaco supply chain, which is what they're intending to do, and also high economic freedom, which enables them to be proactive to business changes. In all the countries we've chosen, there is a relatively low supply chain risk and high economic freedom. And then from these narrowed down countries, we have noted that a lot of the supply chains are on the offline and are rather traditional in that sense. And as indicated previously, there is a strong middle to income class. From here, we have realized that the current countries are focusing on the future and the digital age, as the tracking and tracing score and timeliness score has been increased at a 3, meaning that they will be more responsive to changes in the market.
So SAS Consulting examined the variety of products that will be expiring in the coming years. And we saw that HIV treatment, as well as osteoporosis and cancer treatment drugs will have their patents expire in a couple of years' time, representing a market value of more than $9 billion already. And then we examined the most prevalent diseases by region. We looked at the most prevalent diseases in Africa, Latin American region, as well as the Asia Pacific region. And we found that in Africa, HIV and AIDS cases continues to be a leading cause of many of the diseases there. And look at the Latin American region as well as the Asia Pacific region, breast cancer continues to be one of the most common types of cancer to inflict that region. So what we did was that we wanted to link HIV treatment drugs with Africa and then cancer treatment drugs with the Latin American region. And that comes down to our strategy. The strategy here is for Indie Pharma Co. to establish at least one operation in one continent that it doesn't have any operations on. So it doesn't have any factories in the Latin American and the African region, the emerging markets there. And really what that does is that it reduces its reliance on having to source everything from China or to have to rely only on the United States for its prosperity, where it can just simply expand into other rapidly growing emerging markets there. The next strategy is to trade through neutral countries. Now, this is a very, it's not a new strategy. It is a strategy that has been used in very historic and ancient times. So trading through neutral countries like Indonesia and Thailand, should India or China slap a trade embargo or any other trade barrier, Indie Pharma can just simply trade around through those neutral countries. And the next strategy here is to really focus on manufacturing generic drugs according to the most prevalent diseases in the new region. So in Latin America, you want to focus more on cancer treatment drugs, and in Africa, focus more on HIV and AIDS treatment drugs. Now, India in the next coming years will be digitizing a lot, and they're expected to roll out the National Logistics Policy or portal, which aims to standardize thousands of suppliers onto one platform. So currently there's a lot of red tape. It's very fractured and fragmented in the way things are done. So the NLP is there to streamline a lot of things. Now, the e-health sector is going to triple in value in the next 5 years, and really, in general, the Indian population is still quite skeptical about the healthcare system. So digitizing Indie Pharma Co. supply chain will allow it to improve its resiliency, its transparency, which builds trust, and being able to make decisions based on real-time data that is being monitored. And it is without coincidence that SAS Consulting examined the Logistics Performance Index for India. And in the last 5 years, it has ranked second in tracking and traceability for its score. And consistently, it has been ranked #1 for its timeliness score. So India does have very good and very responsive supply chains nationally. And the next strategy is to try and source as much as locally as possible, given how India is one of the world's most cheapest manufacturers and suppliers of generic and API drugs. So it's only beaten by Thailand. And so really try to source locally, and that way you can reduce your dependency on China. Now, the whole digitization phenomena isn't just doesn't just happen at a governmental level. You can see that in the bottom left-hand corner. There are competing organizations like PCI Pharma, Lupin India, and so on, who are already beginning to digitize their supply chain operations. And M&A operations, consider it in Saudi Arabia and South Africa. And if Indie Pharma Co. decides to conduct M&A operations for these 4 organizations, they are already well on to meet many of the leading Indian generics turnover drug worth value. And so you could see that there is anti-infectives, cardiac, gastro, anti-diabetic, generics drug turnover, which has been in the top 5 in India. And looking at the top right-hand corner, we can see that there is significant opportunity for Indie Pharma Co. to take advantage of the opportunities of patents that will be expiring in the coming years. So to conclude our strategy, we want Indie Pharma Co. to conduct M&A operations for generic drugs and API suppliers across the South American and African region. And we want them to try and source from those 4 organizations, as aforementioned, in order to meet a lot of the generics drug turnover value for its current market. And the next strategy here is to try and trade through neutral markets, and try and engage with Thailand, try to trade through Indonesia. That way you can ensure yourself against any political turmoil. The next strategy would be to digitize your supply chain operations. That way you will improve your resiliency, your responsiveness, the ability to be able to track and trace in real time the movement of your goods. And that's very important. You want to make decisions in a time where politics can really make a 90-degree turn tomorrow. And lastly, try to establish local contract suppliers for your API goods. That way, you don't want to rely too much on sourcing only from China or only from a specific location. You want to diversify the procurement of your API ingredients from as many markets as you can. At the bottom section of the slide, you can see that we did the calculations, we ranked the scores, and Thailand actually came out to be the best country to carry out many of the strategies that we have previously stated. That concludes our presentation, and we will be taking your questions and answering them.
Thank you so much for your presentation. Excellent, excellent job. I would now like to ask our judges if they can unmute themselves and proceed with questions. We have 5 minutes for Q&A for this team.
Good morning. This is Raul Cañizares. Good job on the presentation. One of the things I didn't see clearly is the search for availability of APIs in countries that are not traditional. What did you do to substantiate that you can actually replace China with sources in these other countries?
Well, we looked at the export and import patterns of Saudi Arabia and South Africa, and if we go back a couple of slides, we did the import and export analysis. We tried targeting countries that have high export and import values of their drugs. So high export indicates that they have a very relatively developed industry. So if you don't have a developed industry, you can't export as much drugs as you want. And also rapid growth, because there is a lot of untapped market opportunity and potential there. So Saudi Arabia, as well as South Africa, tended to do well, but South Africa was a bit of a special case because there is negative 0.3 growth there. So it also has a little bit of a risk there, and we did state that in the slides as a disclaimer. But the South African government currently is developing Kettler-Feller. Hang on, let me go. Yep, Kettler-Feller here. So that is a work in process. That's a work in process there, and the South African government is currently making significant investments in the development of the pharmaceutical firm. So that's why we targeted South Africa, and we are also trying to supply low-cost drugs. We looked at Israel. They are a developed and very advanced market, but their drug prices are just too expensive. And remember, Indie Pharma Co. is a low-cost generics drug manufacturer. That's why we specifically targeted those emerging markets, because they're very competitive from a price perspective in the delivery as well as the distribution of those generics and API drugs.
Hello, I have one question. First of all, thank you for your presentation, very good. I have one question regarding your decision about expanding to your supply chain to other countries. Regarding this decision, did you consider the way policymakers in those countries have responded to the recent pandemic? And if yes, what type of policies did you consider? Because, for example, if I was doing this research, the first thing I would take a look right now is, okay, do we have policies like the paycheck protection program that we have here in the United States that supports businesses with loan forgiveness in order to maintain their business? Did you take a look at the way countries responded to the recent pandemic? Because I think this is very important for your supply chain.
Yeah. So a lot of the delivery modes are currently offline, and much of this goes back down to our digitization of the supply chain, because we want the delivery of the drugs to be remote, to utilize a lot of the freight. So currently in Australia, we have people we don't do like signature anymore. You just simply drop the parcel off and then leave. And this really ties back into the digitization of the distribution of drugs. So it's not only just confined in India, it's also a strategy that has global implications. And looking at many of the emerging markets, we know that there aren't strong enough institutions to be as responsive or to be as effective in tackling the pandemic issues like whether we should socially distance to shut down businesses or maintain economic growth. And so the digitization strategy allows the delivery of goods for countries that are still relatively focused on offline modes of delivery, but that digitization strategy is aimed at driving a trend where people can really start to buy those drugs online. And we're seeing that trend. People are working from home. They're buying things on Amazon. I think their stocks have gone through the roof. And as a result, we're trying to push for a more online delivery mode of those drugs.
Hi, it's Christina Valori. I have a question. Going back to the API, the sourcing APIs. In Brazil and Latin America, Brazil is evolving as a very robust pharmaceutical market. So what research have you done specifically on Brazil and its opportunity there as a source of active ingredients for pharmaceuticals?
We didn't. I mean, like sourcing from Brazil we believe it would complicate the supply chain, because if we look at the geographical locations of Saudi Arabia relative to Indie Pharma, which is based in India. Yeah. So looking at the supply chain, right, and really being able to source APIs from Saudi Arabia, from South Africa, really it just makes a lot more geographical sense. And if we were to source APIs from Brazil, then we sort of have to jump like an extra continent in order to do that. So that's sort of the reasons why we did that, but that is an option, right? I'm not saying that we won't be able to do that, but from the most feasible perspective, and really looking at the geographical advantages of being able to source from Saudi Arabia and South Africa, that's why we sort of chose those companies, and more specifically Saudi Arabia and South Africa, because of the growing pharmaceutical industry and the geographical advantages relative to where it is to India.
Thank you so much,
Thank
Team
you.
SAS. I really appreciate
Gopi, I had a question. Oh, sorry. Please go ahead.
Your time. Unfortunately, we do have to move on just to make sure that we can get all of our teams in within the required time slots. So thank you so much, and good luck in the final judging.
Yeah. Thank you, everyone.
Thank you very much.
Okay. I would now like to introduce the team from Iim Bangalore. Please welcome Team Titan as our next presenters. Team Titan, please feel free to share your screen and you can begin.
Shall we start?
Yes.
Just a second. Good morning, everyone. We are Team Titan from Iim Bangalore, and we are here to present our analysis on how Indie Pharma company can insulate its supply chain from shocks arising from COVID-19, and how it can maintain its leading position in long term given the deglobalization trends seen across the globe. So let's get started. The Indian pharma industry is the third largest in the world in terms of volume and contributes to over 20% of the global generics demand, justifying the epithet pharmacy of the world conferred upon it. As of 2019, the size of Indian pharma market was $33 billion, with 68% being contributed by the formulation segment and the balance being contributed by the API segment. In 2019, over 50% of the revenues came from exports, highlighting the significance of international operations. Over 66% of the exports are made only to Northern America, Africa, and European Union, thereby highlighting the dependence on these three regions. With over 47% of ANDA approvals going in the favor of Indian pharma companies alone, there is a growing fear in US on the overdependence on Indian generics drugs market. This is likely to see a regulatory pushback from US in the near future. The US government has already expressed its desire to become more self-sufficient. Additionally, the Indian pharma industry depends on China for over 69% of its raw material requirements, which in itself is posing a challenge given India's preference to reduce imports from China. A brief analysis of India pharma companies performance indicates that the margins of the company have been declining gradually over the years. In terms of revenue, Indie Pharma company derived 38% of its revenues from US and only about 29% from India. Over 69% of the raw materials are sourced from China and only 16% are from India. Indie Pharma company has a network of API and finished dosage manufacturing facilities spread across the globe, with India, US, and some part of Europe being the major centers.
The supply chains of Indian pharma companies are extremely long and complex. Disruptions at any level can get magnified in the lower parts of the chain, leading to a domino effect. Since Indie Pharma company depends on China for over 69% of its API requirements, any shocks resulting from China can have far-reaching consequences. Producing APIs in China is at least 20 to 30% cheaper than India, and this is the primary reason why China has become the global hub of API imports. Limited government support, inadequate infrastructural facilities, and pricing control restrictions have also not helped India's cause in becoming a hub for API requirements. So, what are the potential options at the hand of Indie Pharma company to reduce dependence on China? It would be extremely unreasonable to expect that the dependence on China can be done away with overnight. A series of short-term and long-term measures need to be undertaken to achieve this objective. In terms of short-term measures, a China plus one strategy needs to be implemented. Indian pharma company should diversify its sourcing requirements away from China to other countries like the US, India, Singapore, Hong Kong, which are also emerging API markets. While this could lead to higher costs in the short run, it is a necessary step to insulate from the Chinese influence. Indie pharma companies' recent API acquisitions in Israel, Japan, Russia should also be integrated into the supply chain to diversify away from China. The Government of India in March 2020 announced a $1.36 billion package to boost the domestic API industry. This inter alia includes setting up of bulk drug parks with common infrastructural facilities and providing production-linked incentives to the firms producing critical APIs in India. This is expected to bridge the price gap and make domestic production of APIs more competitive. As long-term measures, we believe Indie Pharma company should step up its capex plans and take benefits of the schemes introduced by the government in line with what a lot of other domestic companies in India have been doing. Increasing R&D spend to around 10% of revenues, inorganic expansion through acquisitions outside China should also be some other strategies to boost Indie Pharma companies' in-house API capabilities.
In order to consolidate market share threatened by deglobalization, we believe that Indie Pharma company should firstly build API capabilities for backward integration to shift dependency from export to generics of APIs. It should also capitalize on the low-cost generic drug advantage it has by moving manufacturing closer to developed countries, which would even provide it the advantage of cheap labor. We have chosen the following geographies for new market entry. In Asia Pacific, we recommend targeting Japan, given its increasing shift to generics, Thailand and Vietnam for its cost advantage, and Indonesia for its government schemes. Recommended strategies for entry would revolve around building relations with governments, adopting the M&A route, and even building R&D centers to leverage global best practices. There are plenty of African countries brimming with opportunity with their growing middle-class population and increasing per capita income. China has no doubt had the first mover advantage, but the broad expanse of the continent still has immense latent potential. Our route to entry would focus around partnering with local players, which would help navigate government peculiarities. Given Africa's import focus is shifting from finished products to intermediaries, setting up manufacturing plants, that too at affordable costs, would help build a stronghold in the geography. The short-term focus of exports to Africa needs to remain on generics with development of improved API capabilities paving the way forward. When it comes to Latin American countries, especially those of Brazil, Mexico, Chile, etc., with their supportive government schemes providing not just a great potential for exporting generics, but also attractive locations for setting up manufacturer facilities to cater to the Latin American and US markets. Brazil, Mexico, and Argentina show potential for immediate penetration, while Chile, Colombia, and Peru can be explored in the medium term by building grassroots partnerships to combat the political instabilities in these countries. Using the innovation ambition matrix, we have tried to determine the market entry and consolidation strategy. Each country is denoted by a circle, the size of which is commensurate with the market size of their pharma sector. We observe that while in the existing markets, innovation would be limited to modifications and incremental products, it is the untapped emerging markets that provide maximum growth potential through transformational approach. The map on this slide shows the API and finished dosage manufacturing facilities of Indie Pharma Company. The plan going forward should be to break down the large and complex supply chain into smaller parts or clusters, with each being modular, integrated, and self-sufficient. Requirements of the finished dosage manufacturing facilities in each of these clusters should be met out of the API manufacturing facilities in that cluster itself to the extent possible. The focus should be on promoting intra while reducing inter-cluster transactions in light of the deglobalization tensions. Future acquisitions should also be made to complete the incomplete clusters.
We also see that the conditions in the Indian pharma market are also immensely conducive for growth. This is aided by a government's package to boost the domestic API industry, the Pharma 2020 vision, and opening the sector to 100% FDI. Some of the key growth drivers in this segment are epidemiological factors like increasing patients and disease prevalence, growing incomes and insurance coverage aiding in affordability, improving infrastructure and government aid enhancing accessibility, and rising acceptability of modern medicine and newer therapies. These factors present a huge opportunity for indie pharma company to cash in and make profits. When it comes to innovation, adopting the co-opetition approach, which is the act of cooperation between competing companies, could yield knowledge and resource sharing and cost optimization. However, there are risks involved of leakages and conflicts which should be considered before adopting this approach. Basis our analysis, the potential for new products lies in niche and specialty products which currently have limited competition. Indie Pharma has the unique opportunity to either adopt the outsourcing model or be a provider of these services to reduce cost. At present, the spread of COVID has increased the demand for immunity boosters and vitamin supplements, which are low-cost formulations with handsome margins and are another avenue for indie pharma company to explore.
To sum up, whether COVID-19 or any other pandemic in the future, dependence on any single country for inputs is a recipe for disaster. In order to address this, Indie Pharma Co. needs to diversify its sources of inputs to other countries like US, Singapore, Hong Kong in the short run. In the longer run, there is a need to build in-house capabilities for API manufacturing. Expansionary capex plans, higher R&D budgets, and acquisition of players outside China should be the long-term measures. To maintain the profitability position given the deglobalization trend and the existing dependency on developed markets, Indie Pharma Co. should look at expanding into developing markets. They can capitalize on the low-cost generic drug advantage as well as set up manufacturing bases at lower costs. Eventually, as API capabilities are developed, these developing countries will prove to be ready markets. The Indian pharma industry is also expected to grow, and the company needs to leverage this trend by expanding beyond its existing portfolio of generics. Innovation above imitation, in-house API manufacturing, and entering niche segments with lesser competition is the need of the hour. Thank you.
Thank you so much, Iim Bangalore and Team Titan. We appreciate your presentation. Excellent job. I'd like to start off questions with Professor Saranga, who will go first, followed by Gopi.
Good presentation, guys. I just have one question that you do realize that one of the reasons why Indie Pharma is able to make good profits is because they're able to source from low-cost countries like China, and that explains why nearly 70% of their APIs are coming from China. Now, your strategy is for them to start sourcing from countries like Japan and US and Hong Kong in the short term. And, that is definitely going to hurt their profits because they will not have the low-cost advantage. So why haven't you explored low-cost sourcing strategies near these developed countries? For example, US, you could have looked at South America, right? Latin American countries. So have you looked at it, and why have you not proposed it?
Sure. So I'll probably start that off, and my team members can join in if they have any other inputs. So ma'am, firstly, like you said, right, shifting to countries other than China is a necessity in the current situation, especially given the fact that there are a lot of geopolitical tensions and companies are looking to adopt the China plus one strategy. So while we agree that it is going to be costly in the short run, that is somewhere that all the pharma companies and eventually the entire industry is going to move. And perhaps, I mean, it is a trade-off between the flexibility and between building resilience in your supply chains. So that is something that the companies eventually have to adapt. In terms of the other geographies that we've explored, so given the fact that Indie Pharma company has a lot of manufacturing facilities in India itself. So for example, if you look at this particular slide, here what we've shown is we've shown whatever manufacturing plants and API plants that they have. So I mean, having a look at this map, it indicates that a lot of manufacturing for Indie Pharma company is concentrated in and around the Indian subcontinent, which is primarily the reason why we thought that moving to geographies such as Hong Kong and Singapore would make much more sense. Having said that, we've also written that US could also potentially be a sourcing market, and which will primarily be aimed at catering to the US markets itself. So, I mean, we are looking at US as a market, but yeah, Latin America is not something that we've explored at this point in time.
Okay, thank you.
Thank you. Gopi Sidharam, you can go ahead with your question.
Yeah, sure. Thank you, Team Titan, for this wonderful presentation. It is very clear. I just had one question. You're talking about near-term initiatives and about a China plus one strategy, which I think looks feasible. The second point, which I wanted to ask, was you had mentioned about increasing the R&D costs by, I guess, 8 to 16%. With the margins going down already, it is trending downwards. What solutions do you have to increase the top line that would support this increasing R&D spends?
Sure. So one point here. So yeah, we are proposing to increase the R&D spends to around 10% of the revenues, which is somewhere in line what the industry is spending, right? So for example, if you look at the top 10 players in the industry, they're spending around 9 to 9.5% of the revenues on R&D, whereas Indie Pharma company as on date is spending around 8%, which to that extent seems slightly less. In fact, companies like Lupin, which are the industry leaders, are spending more than 10. They've spent around 10.5% as on March 20. So to that extent, the R&D spend of Indie Pharma company seems to be slightly on the lower side. In terms of how this R&D is going to materialize into the top line, so like we've said, we would like the company to focus more on specialty products and more niche molecules, right? Which are products that have high margins and where the competition is low. So we feel the next line of growth will come from those product segments, and which will also ultimately end up justifying the higher R&D spend that we are proposing.
But that will take time to materialize, right? If you invest in R&D today, it is going to take a few years. So do you have any short-term measures to increase the top line, which will substantiate this increased investment in the next 2 years, let's say?
Saransh, if I could just jump in here.
Sure.
I think one of them that we had mentioned was on the vitamin and immunity boosters. If we could just go 2 or 3 slides later, which is something which we believe could be a short-term measure to boost your top line, given that the margins there are higher and the R&D required would not be as much. That is one thing that we've mentioned.
Okay, thank you.
And just one more point, if I could add there. So again, I mean, while we agree that the R&D spend that you rightly spoke of, right? It's a long-term measure. It's not something that can be developed in the short run, which is again probably the reason why we've put it under long-term measures, because we understand that R&D is not something that can yield results immediately in the short run.
Thank you. Ashish Mukherjee, you can ask your question next.
Yeah. I just wanted to understand from your market expansion strategy, you mentioned about Japan, and I just wanted to understand what kind of research have you done to understand the market's attractiveness for generics in Japan? Thank you.
Sure. So I'll just take that and then the team can add if they'd like. When it comes to Japan, what we have seen is an increasing trend that they're moving from Japan-made drugs to more of foreign generics, which, like we've said, is projected to form 70% by FY25. Currently, it is more on Japan-made drugs, and there is a trend to move to generics, which is where indie pharma companies' strength lies. And given that their government, of course, is giving incentives to boost R&D, we felt that this market is something that can be explored by indie pharma. And of course,
just to add,
sorry, go ahead.
Just to add one more point there. So, I mean, we all know that aging population is something that Japan is really worried about, right? And their governments have been spending a lot of money when it comes to healthcare and social security, etc. And there is an urgent need to drive the healthcare cost down. So, I think which is where a generic market makes a lot of sense, which is probably the reason why Japan is probably one of the brightest markets that we feel should be targeted.
Okay, thank you.
Thank you. We do have time for one more question, and I apologize to all our judges who are anxiously awaiting. But this one will go to Lorena. Professor Lorena, if you can ask your question.
Good morning, guys. Congratulations for your presentation. I was a little bit curious about competition because you are proposing the expansion to different markets such as Latin America and other emerging markets. Did you make any research regarding the competition over those markets?
Sure. So I can take this one. Ma'am, while we've not made exact research on the companies, we understand that the best way to enter these markets is through an M&A route. Also, because like we mentioned, there are peculiarities of the government there or political instabilities, and to build a more grassroots partnership would help in the longer run. So while we've done a more geographic or country-wise analysis, if you're looking for like specific names of companies that we would want to partner with, that we have not dug into at this stage.
Thank you, guys.
Thank you so much, Team Titan, for all your work, and good luck in the final judging.
Thank you.
Okay, our next team to present is from Iim Ahmedabad, and it is Team The Famous Five. So we'd now like to welcome them into the panelist section, and they can start sharing the screen whenever they are ready. Team Famous Five, please go ahead and start whenever you're ready to go.
All right.
Is this visible?
Yeah, it is. Thanks, Adit. Hey, everyone. We are Team Famous Five from India. We are here to help Indie Pharma Co navigate to the next normal, and not just navigate, thrive in the next normal. Next slide, please. So to sum it up, we look at how the pandemic has had an impact on the operating model as well as the supply chain of pharma companies. We'll also analyze India Pharma Co's strategy before the pandemic and recommend measures for Indie Pharma to recover and retool and be prepared for the next potential crisis. Next slide, please. Right, so the pandemic has had a significant effect on most industries, including the life sciences industry. The crisis has exposed numerous vulnerabilities in the operating model of pharma companies. Some of the ways in which the business model has been impacted are, number one, delays in clinical trial impacting drug launches, suspension of medical conferences, which impacts promotions, over-reliance on geographies such as China, which impacts sourcing, suspension of foreign facility inspections, which impacts approvals, shift to digital modes for sales, which impacts conversions, and people staying indoors due to the lockdown impacting sales of medicines of seasonal infections. Numerous risks exist across multiple stages of the supply chain, such as, say, the ramifications of insufficient business continuity planning, vendor sites remaining shut, increase in overhead costs, freight rates, and transport systems being hampered, etc. Next slide, please.
So, having understood the problem, we use a three-dimensional framework to first analyze how has Indie Pharma succeeded so far. On the ambitions, we saw that the company wants to maintain its leading position in generic pharma, wants to maintain and boost profitability, and very importantly, wants to have business continuity plan in place so that the business is not disrupted in events like COVID. Next, we saw that it has been able to do so by capitalizing on increasing share of generic pharmaceuticals in the market, as well as by aggressively pursuing M&A as a medium to grow. And finally, we saw that its key revenue markets are USA and India, while it sources its major raw materials from China. Thus, we deduce from it that they exclusively focused on cost minimization and ignored business continuity plan, which cost them dearly. Next slide, please. So let's look at the recommendations in brief. The most impactful and commonly resorted means of recovering from disruption in supply chain is actively engaging in M&A, which helps restore operations and also helps meet regulatory requirements in some cases. Next, we see that the long-term solutions of digitizing supply chain can not only help in developing transparency across the supply chain, but also develop people capabilities. Diversifying suppliers is also another recommendation which mitigates the risk of disruption, but it comes with a trade-off of cost. Also, we believe that with volatile demand, building buffer inventory, though may not be very effective, but can be an immediate measure to avoid stockouts. Further, we realize that some ideas, though may be highly effective, it may be very difficult to implement them. These recommendations are, first, developing local forums of pharmacies so as to help pool inventory and fulfill the volatile demand. And second, reorienting the product portfolio to focus on locally sourced products. Overall, we land upon a mix of measures to recover from the disruption and keep up with the globalization trends. We therefore look at the recommendation from the lens of 5 dimensions, which are planning and supply network, logistics and transportation, financial resilience, product complexity, and organization maturity. Next slide.
For a first recommendation, we look at raw material sourcing strategy for Indie Pharma, that they should choose between 3 options of fully in-house production, preferred supplier, and multi-site sourcing strategy. We compared these 2 models basis 2 parameters of cost and reliability that we believe are important for this. Multi-site sourcing offers significant reliability advantages, even though there will be higher corporate overheads from managing multiple suppliers. Multi-site sourcing thus provides protection from tariff threats as your suppliers are spread across different geographies, while also containing supply chain disruptions at times of pandemics and wars. Moreover, we see lower supplier hold-up costs because of lower asset specificity, along with fewer losses generating from supply chain disruptions. Since reliability is more important than cost here, we should go with a multi-site sourcing strategy, and Indie Pharma should choose between 2 submodels of this, which is consortium or service aggregator based on cost and reliability analysis here. For implementation, we suggest that Indie Pharma begin with sourcing raw materials from Mexico because of its proximity to US, from Australia because of its existing API present facilities over there, and from Vietnam because of cheaper labor and lower regulatory hurdles over there. For recommendation 2, we thought that it would be interesting to look beyond the pharmaceutical industry so as to understand whether pharmaceutical industry has maintained its inventory at optimum levels or not. From our understanding, we saw that FMCG companies have the best practices in maintaining their inventory levels. And in fact, this analysis shows that the number of inventory days are extremely high in the pharmaceutical industry in India specifically. This is possibly happening because the levels of inventory are being decided in an ad hoc manner. Further, such ad hoc inventory setting has made them quite unresponsive to any uncertainties. Relying on our operations management concepts, we therefore suggest that the company adopt statistical modeling of inventory, wherein safety levels of stock are decided based on the accepted level of stockouts that the company can bear. This can also ensure that the company has enough raw material inventory in case a global disruption happens again.
Our third recommendation is for Indie Pharma to digitize its supply chain. We suggest as primary measures to have a digital platform to manage multiple suppliers, decreasing not just corporate overhead expenses, but also increase compatibility and ease of onboarding other suppliers. Secondly, implement a real-time inventory mapping system to increase transparency on every leg of the supply chain. And thirdly, stress test the supply chain with forecasting capabilities to understand the responsiveness of the supply chain. The digital solutions would help facilitate other recommendations like adopting a more robust procurement system, increasing partnerships and alliances, and also allow change in mode of transport in times of need, reinforcing resilience. Investments in digitization need to reorient the organization as well. We look at 4 dimensions of the organization that needs focus. System and tools that now become real time, people and capabilities that now can form specialized teams instead of sole focus on operational efficiency. Processes can be aligned to handle exceptions instead of trying to maintain repetitive tasks. Structure needs to be more than simply cost driven and become more agile and responsive. We recommend that this investment also to be distributed as 70% in adopting mature technologies, 20% in developing ones, and 10% in possible disruptive ones. For our 4th recommendation, we recommend that Indie Pharma actively engages in mergers and acquisitions and collaborate with local partners that not only help in quickly resuming operations, but also develop regionalized supply chains. All strategic assets are highly relationship specific and thus require firms to invest in either M&A or vertically integrate. This is especially true when there are less economies of scale for existing suppliers to achieve what an in-house unit can't. Raw material and API production are thus strategic assets, which need to be acquired through M&A or vertical integration. On the other hand, non-strategic assets can be procured through the market or through joint ventures and alliances. Further, startups like 1mg in India are disrupting old supply chain models by aggregating different tiers of distribution and selling drugs directly to customers at low prices. Investing in such startups could help Indie Pharma tap into the rural Indian market that currently suffers from the lack of drug availability and extremely high prices in local pharmacies.
Black swan events like COVID-19 are the unanticipated catastrophic events that lead to grave consequences. Hence, implementing our recommendation will also be exposed to several risks. We try to assess these risks by understanding 1, their probability of occurrence by classifying them into remote, unlikely, possible, and likely, and 2, their business impact estimates, which can either be low, medium, high, or very high. We devised appropriate mitigation plans for each of these key risks, and they were rated either effective, adequate, or improvable. The spike in consumer grievances due to possible online inefficiencies can have several impact on the brand image, whereas stock market reactions on strategic collaborations are the 2 high-risk challenges. Low-risk challenges with respect to overlap of supply chain networks with competitors can be mitigated by employing global supply chains across geographies, whereas risks with respect to data privacy can be moderated by investing in cybersecurity. Next slide, please. Our implementation plan spreads across 3 phases: stabilization, reconfiguration, and transformation. The implementation of inventory estimation systems is not only the most viable short-term solution, but also the most crucial in order to cater to the domestic demand. Strategic collaborations and multi-sourcing contracts would be the next course of action, followed by digitalizing supply chain after requisite research and substantial funding. Creating a pragmatic business continuity plan and a broader product portfolio are the last stage recommendations. We also try to conduct a scenario analysis wherein we compared scenario 1, when none of the recommendations were implemented, with scenario 2, where our recommendations and a disaster recovery plan was put into action. The present value of the estimated net profits until the next pandemic is higher in the second scenario than the first by 0.03 million, details of which are in our appendix. This proves that our initiatives will not just help Indie Pharma to navigate to the new normal, but will also act as a deterrent to disruption in case of a reoccurrence of a black swan event. To conclude, our recommendations are sure to prove beneficial and also sustainable in the long run. So Indie Pharma won't let a crisis go waste. Thank you.
Team Diversify, excellent presentation. I'll now open it up to questions from the judges. Ari Bitov, you have a question for the team?
Well done. I really appreciated your presentation. One thing I'd like for you to comment on is, I think it's unclear whether we're going to see multiple ongoing waves of closures because of COVID within certain regions, or whether, if there's better dissemination of treatments and mitigating factors, that we're going to see fewer waves of needing to shut down different communities. And so can you speak to how your plan is both resilient to that and might change and flex around the COVID rollout over the next, let's say, 6 to 24 months?
Right, so I'll start. And so essentially, in terms of COVID-19, we looked at 6 critical uncertainties that might exist. And we looked at the extent of their impact. We looked at the duration of the disruption. We looked at the nature of societal and government response to COVID. We looked at the macroeconomic scenario. We looked at the international government or decisions for pharma supply chain. We looked at societal response to health and care seeking, and we looked at the evolution of competitive landscape. Based on the late term trends that are coming out of China, in terms of, say, the sites, vendor sites opening up again, or from India, where the focus on UHC, which is the Ayushman Bharat scheme, or say NLEM, the National List of Essential Medicines, based on these cues that are coming from governments and companies across the world, we believe that the recommendations that we've given will need some investment in the short term, but are going to be resilient and yield benefits in a 5-year horizon. Yeah.
Just adding to Kishan, given the COVID scenario, we've reached out to multiple stakeholders in the pharmaceutical industry, and we've realized that all of them or most of them are actually engaging heavily into collaborating with local partners currently to mitigate this COVID impact. And as it rolls out, probably by the end of this, they'll be more regionalized and resilient as this draws out. And given that we also suggest this as a primary measure, we believe that engaging in such collaborations is the immediate measure to take.
Thank you. Rob, do you have a question for the team?
Yes, good job. I was wondering if you thought about the cost of closing down facilities in India, and at the same time that you are recommending rather large investments in all directions, and the short-term impact and the capability of the finances of this company to withstand those two effects at the same time.
Right. We do realize that these might be significant investments, but COVID has accelerated digitization, especially in unprecedented ways, and companies are actually looking heavily to doing this. In the case, Indie Pharma is one of the biggest Indian companies, and we believe that they have the financial potential to to invest in these as well as collaborate with local players. And diversifying on the supplier side also we believe would be a longer term strategy and not very immediate, because it would, as you rightly mentioned, that would require a lot more capital expenditure.
Sorry, I guess my question was really about the cost of closing down facilities, because adding new capacity when you don't have the demand requires that you shut down some capacity in India to redeploy your geography.
Right. So the sourcing problem is not from India; it's from China mostly. But yeah, I do realize that mostly you wouldn't really need to close down Indian facilities, and possibly because the problem would occur either on the supply side or on the distribution side. Wherein on the distribution side, we're suggesting that you collaborate with local players, and on the supplier side, we're suggesting that you diversify from China to other countries. So definitely the cost of closing down units in China would come into picture, but possibly not in India. And given that India also caters to Indie Pharma's 30% of their demand, and the COVID scenario has only shown a surge in pharmaceutical demand, we possibly did not think of closing down Indian sourcing stations.
Just adding on to that, the one more reason why we thought that there is no really reason or requirement to close down the facility is that we believe that whatever sourcing we are doing from local suppliers from various countries, that will be in small quantities with the option to scale it up at a later stage in case the pandemic hits. So therefore, we believe that only because we are shifting small portions of quantities to various countries, there's really no reason to shut down a huge plant in any country presently. So that's why we have not recommended to shut down any facility currently.
Thank you.
Thank you. Soraya, do you have a question for the team?
Yeah, thank you. So first of all, thank you for your presentation. It was really good. I have a question regarding the demand side of the of the case. So the case stated that Indie Pharma Co. is really reliant on the US market, and now there are like big disruptions about the want of US to import from India generic drugs. So I understand that you propose that the strategy they should do is to focus on M&As in startups to foster demand. But what else do you propose, or do you think that is enough for reducing the reliance on the US market?
Right. You rightly pointed out that the local collaboration is definitely like the immediate measure that we believe to quickly distribute drugs in the US. But also we mentioned that you could diversify into states like Mexico, which is very close to the US, and they already the case mentions that they already have a plant in the US as well as Canada. So you could set up plants in neighboring countries to supply drugs into US without increasing the costs.
Okay, so you feel like with the fact that they have plants in the US and nearby locations, this would be enough for the US government to not be so hard on Indie Pharma Co., right? Okay.
Thank you so much. Unfortunately, we're at the end of time for questions. Thank you, Team Famous 5, for sticking with us and your presentation. Great job and good luck with the final judging. I would now like to welcome the team from SC Johnson College of Business at Cornell University, Cornell Team 2. So we'll just give them a minute to filter into the panelist section. Cornell Team 2, whenever you're ready, you can start sharing your screen.
Can everyone hear me?
Yes, you're good.
Okay, wonderful. So hi, everyone. We are Case Team 2, and we're representing Cornell's SC Johnson School of Management. My name is Afua Santua. And so I'm first going to start off talking about the state of business with COVID-19. So at the moment, we are over 48, there have been over 48 million global COVID cases and over 1.2 million COVID deaths. And despite this bleak outlook, 55% of executives think the economy will improve in the next 6 months, according to a McKinsey survey that is taken every single month. And so we believe that the primary considerations for Indie Pharma Co. should be focusing on supporting their workforces in productivity and health, developing agile supply chains, and establishing a distributed network. We believe that focusing on their employees' productivity and health is going to be paramount for their strategy going forward, and making sure that their company is able to continue to progress. And then also we believe that they should have an efficient and transparent organization and develop analytics to be able to assess their current position. And once they're able to do that, they'll be able to support their agile supply chains and make the decisions necessary, and also pivot wherever is necessary.
Hello, so my name is Evan Buchanan. I will be addressing our supply chain. With Indie Pharma Co., we see two major issues: deglobalization combined with COVID-19, the pandemic, which presents three major challenges to our supply chain, and we have three solutions listed here. We want to diversify away from the concentration of raw materials in China. We recommend our company do this by switching API suppliers from China to India and then acquire said supplier. Our second risk here is regarding Indian government regulations tightening regarding drug export regulations. We recommend beefing up our lobbying efforts to counter this. And finally, we see potential revenue shrinkage in the United States regarding the President's America First policy. To counter this, we want to expand to South America and Southeast Asia. These moves will be supplied by our US and Indian manufacturing plants. So the chart to the left here shows some Indian API suppliers we've identified as potential acquisitions. Our company could acquire one or a combination of the 5 listed. We also have some important favorable statistics. To the right, we have an Indian, the chart shows that Indian API production is typically more costly than Chinese counterparts. But with the acquisition, we expect to incur some synergies, opportunities for Indian Pharmaco to reduce their costs. And also with an Indian API supplier, we should be able to reduce tariff costs and transportation costs.
Hi everyone, my name is Tor. And so far we already talked about how we can handle the COVID-19 problem for our daily operation, and also how we can secure our supply chain under the COVID-19 condition from short-term perspective. And then we're gonna talk about how we can maintain our revenue growth and the profitability from the long-term perspective. We're gonna do it from 3 steps. The first step is we're gonna diversify our revenue sources, especially focus on the emerging market. And the second one is to build our own manufacturing facility in the US. And the third one is to do the horizontal acquisition, like acquire some other companies like us to seize the CMO opportunity over there. Yeah, second one. Next. Yeah, this page and the next page, I also going to talk about, next 2 pages are going to talk about how we can diversify our revenue sources. After we saw all the data, we found that Brazil is the most promising emerging market we must look at. And whatever from the GDP, aging population, and also the medical expenditure, both of them can support us to enter the Brazil market as our next stop. And also we see that the US states are also the leading country of the origin pharmaceutical product export to Brazil. So that means that if we set up our own manufacturing plant in the US states, we can be more easy to facilitate our business expansion in Brazil. Next.
Yeah, so once we get into Brazil, then we want to think about what kind of partnerships do we want to form in order to get our drugs out, right? So the 2 things that we thought about was PPP, private-public partnership, and the general distribution partnership. For PPP, it's particularly important to us because we want to make form relationship with the government such that we can have permission to expand our factory capacity in the future. And then for general distribution, what we want to focus on two different channels. The first channel will be retail pharmacies. What that means is that we're going to partner with chain retail pharmacies in Brazil to distribute our drugs. And we have seen this to be wildly successful, in which they have been growing at 25% YOY. And the best example will be BR Pharma, in which they double in size to more than 700 stores in just 3 years. The second channel that we leverage for retail is really partnering with hospitals, right? We want to come in and cover drugs that are not currently available and become the de facto recommendation when these healthcare workers are treating patients.
Yep, to just kind of follow up on Kevin's point, hopefully it goes propitiously, our plan in Brazil. So we would like to expand that to more of a global reach, obviously starting in India because that's where our home base is, and kind of taking a hierarchical approach, which you'll see on the left. kind of getting into the whole medical lineage, the consultants, the practitioners, the physicians, having kind of insight into all of that is going to be really integral in the next few months, just because increasingly people are getting more information based, especially in the lower and middle income brackets. In India, they have access to internet, and now they're trying to self-medicate, and especially with COVID, people are trying to distance. So OTCs, OTXs are going to be increasingly more important in the next coming months, next coming years. So that's going to be integral to our process. And then the second part of that is more a detailed focus on the employees. For whatever reason, we've seen a dearth of sales professionals and medical professionals that are really adept in their craft. And whether it's societal, governmental norms, we don't really know, but importing talent outside. So foreign nations, United States, they're getting 98% approval rate on their generics. India's getting around 83%. So having these scientists come in is going to be super important to cutting down our costs, getting more of our drugs out there, and then the sales professionals who can demand more insights into the markets that we're really, really trying to hone in on and expand our reach to is kind of the next 2 to 5 year process.
Yeah, so far I did finish how we can diversify our revenue sources, and then this page is going to talk about we want to build our manufacturing plant in the US. In the right side, we see that we already selected Dallas, Texas as our location. There's a couple of reasons, like a convenient location, and also Mexican is our target we want to partner with. And the last one, if you set up the manufacturer over there, we can get easier to South America market. Yeah, next. And the last step is we're going to do the horizontal acquisition for the CMO acquisition there are 3 reasons. And the first one is we saw the market is very going up very well, and also the fragmented. The second one is the patent cliff to create a great market for us. And third one is we see that the biomedicine company really require more tech complication and also high manufacturing costs. They need us to do the manufacture. Yeah.
Last but not least, to wrap it up, we're going to do post-acquisition, horizontal acquisitions. We do foresee a lot of inefficiencies in terms of back office, front office, and manufacturing systems. So to get creative, we'll do all systems under one umbrella with a partnership with Oracle, in which we'll procure enterprise resource planning system with Oracle, CRM system with Oracle, and the manufacturing software that's tailored to us with Infor. And to do so, we'll also use RSM for implementation technology integration. And that will wrap up our conversation for today. We'll welcome more questions from the judges. Thanks.
Thank you, Team Cornell. Excellent presentation. I'd like to open up with a question from Professor Mohammed for this team.
So thank you, Amanda. It's a great presentation. I just had a question regarding your horizontal acquisition strategy to create vertically integrated opportunity. I mean, I really wanted to understand how do you define a horizontal acquisition and how does it link up to your vertical integration strategy? And moreover, considering that there's a huge lot of uncertainty around the COVID crisis, how do you really create or go ahead with an M&A strategy and create another level of uncertainty and post-merger integration issues that may crop up? So have you thought about how you would want to really pace out your acquisition strategy considering the immediate uncertainty faced by the company?
Okay, I'll talk about it. Ethan, could you go back to the last page talking about the CMO opportunity? Yeah, so this page is talking about CMO opportunities. CMO means as the contract manufacturer organizations. Yeah, there are 3 reasons, like what I said. We see that the CMO is a trend, especially for the API and combined with the dosage manufacturing is gonna do better in the market. So we like to see that the market is growing very well. The second one is patent cliff. because a lot of patents are going to expire in the recent years, created a lot of market for the CMO, because we have to help those a lot of companies to do the generic drug after the patent already expired. So that means that we need to expand our manufacturer capacity. So if we acquire other peer company to seize that market opportunity, I think is the better way to do that. The third one is the most important, because we see that the biomedicine company is growing very fast, especially for their R&D expenditure, and is growing also compared with traditional medicine company. So biomedicine company, their feature, they had a very different feature from the other traditional medicine company, because after they do the R&D and trial phase, they need to do the manufacturing, and the better manufacturing needs higher manufacturing costs and also upfront higher upfront capital expenditure, and also the manufacturing technology is more complicated. So they need, just like us, the more professional manufacturer to help them to do the final dosage manufacturing over there. Considering the future economy is uncertain, I would like to say that most of the company that we want to acquire, so we're gonna start it from the business partnership. And then after we already go through very well, I will look at the what kind of acquisition opportunity over there. Just like vertical acquisition we already talked about in India. I think that about all of the Indian company we look at, we're gonna start it from the supplier relationship, and then we'll think about how we can acquire them.
Thank you.
Thank you.
Mr. Gopi Shradhan, you can go next.
I'm sorry, I didn't have a question. I think it was from previous.
Oh, sorry about that.
Sorry.
No, you're good. Mr. Ashish Mukherjee.
Yep. So thanks for a very good presentation. My question is primarily on your strategy about Brazil. So did you get an opportunity to understand the uncertainty in the market in Brazil, the regulatory framework in Brazil, and the kind of competition they have, the generics in Brazil? So it's more about trying to understand your little bit of the kind of strategic work which you have done in Brazil.
Yeah, initially, when we think about the emerging market opportunity, we thought about South America and Southeast Asia, but after we saw the Southeast Asia the market, because a lot of generic drug market is dominated by the local company in Southeast Asia. But in the South America, which is very different from, so we think that we still have opportunity over there. And also, based on that, the aging population, and also some, just like Brazil imports the most generic drug from the United States. That's why we want to, that's one of the reasons that we want to set up our manufacturing in US. That's especially in Texas, because it's there is a natural connection between the Texas and the South American market. So which gonna help us to facilitate the business, our expansion in South America.
Thank you.
Thank you so much. We have time for one last question. Rob, do you have a question for this team?
Yes, thank you for the good presentation. With listening to everybody, the strategy of diversification from China affects not only this manufacturer, but everybody. So there's going to be like a race around the world to disengage from APIs in China. Did you think about the opportunity that presents not only for their own consumption, but for everybody else who is looking to diversify from China, as they see this bipolar world developing given the current situation?
Evan, do you have any idea about that?
Sure. Just wanted to go back. So regarding breaking up concentration from the Chinese market, I mean, we saw that, for, a few weeks at a time with the COVID pandemic that our Chinese suppliers were not able to operate, which, put a hole in our entire supply chain. So while there's going to be, we think, competition regarding diversifying away from China, we think that timing is particularly important. It kind of addresses the earlier question regarding the M&A strategy during these uncertain times. The M&A strategy is uncertain, but we are in uncertain times, and timing is very important regarding this initial part of our strategy. So that's why we want to really start to diversify away from the Chinese market. The concentration is a significant risk, and we want to, time is important. We want to expand to the Indian market to reduce costs and also possibly create synergies with the rest of our strategy, vertical integration and horizontal.
Thank you, Evan. I'm going to have to cut you off there. My apologies. But thank you to Cornell Team 2 for all your hard work on this, and good luck in the final judging. I would now like to ask the team from our last team, so congratulations, Universidad de los Andes from Colombia, Team VUCA, to join the panelist section. And as soon as you're ready, you can start sharing your screen.
¿Ellos nos avisan o...? Hi everyone, we are VUCA team. Vision, unity, commitment, and ambition from Universidad de los Andes, Colombia. Our consultant team is composed by Iván Wilches, Federico Chávez, Ricardo Nieto, Alejandra Duarte, and myself, Ana Paz. Our purpose today is to solve the following question. What Indie Pharmacos must do in the short term to face the new post-pandemic reality? What are the best strategies Indie Pharmacos must follow to sustain their leading position in the APIs and medical pharmaceutical sectors? To start, what are the main challenges? Well, the diagnosis based on historical data and macroeconomic outlook tell us there are two red flags we need to zoom in. The first one is the impact on revenues due to a strong reliance on exports. 71% concentrated in US market, a negative outlook, and a drop in international trade of 32% in 2020 in the worst case scenario, according to the World Bank, lead us to present you today our projections. A clear fall in revenue of 14.9%, assuming that the company does not manage to soften the high dependence on international markets. The second one is the impact in revenues, considering again two facts. First, Indie Pharmaco imports 70% of raw material from China. And second, China stopped, of course, its production due to the pandemic situation. Impacts are again worrying. A fall of 5.8% in revenues, assuming that the company does not start any tactical actions to face the crisis. Alejandra, please tell us more about the short-term actions.
Thank you, Anna. Knowing the challenges, we are going to start with the immediate actions that Indie Pharmaco must take in order to solve urgent problems in terms of organizations, suppliers, and customers. From an organization point of view, there are quick actions that require the commitment of the whole company, from the board to the support areas. In that sense, the business continuity plan must be applied promptly, assuming there is one. And it's quite important to say that that task relies on the strong Indian resilience culture that is highlighted by the FM Global Resilience Index. On the other hand, the creation and development of a crisis committee is also key, because it allows the company to monitor in real time the situation of the company regarding the demand and supply. But most important, it allows the company to take immediate actions if needed, whether from inside of the company or from the market perspective. Having organized the house, we can proceed now to review the strategy from supplier side. Ivan, can you tell us about it?
Sure, thank you. In that field, we are going to implement two actions. The first one is to migrate to a safety stock model in order to increase the sources of the company in key supplies for the manufacture of the most profitable products, turning from a cost-effective model to a resilient effective model. This means that we are going to have an impact in the production cost that we already modeled through a sensitivity analysis of cost and revenues, resulting in possible EBITDA scenarios. For example, in the base case scenario, the EBITDA margin is going to be -4%, assuming an increasing cost of 30% by the implementation of the safety stock model. The second action is aimed to create a strategic alliance through the identification of the main companies of the sector, such as Aurobindo, Cipla, and Dr. Reddy's, that are similar in terms of size and market behavior, with the purpose of joining forces to protect the industry supplies. This means that the excess inventories of them might be our shortage. This strategy is based in the protectionist character of the Indian industry and in the leading position of the Pharma that creates better negotiation power. Finally, from the customer side, we want to prioritize our high revenue customers, and second, concentrate our marketing efforts in the local market. To do so, we are going to identify through the Pareto principle and other criteria as the importance of a key account or most profitable customers. I mean, those customers that bring us the 80% of our total revenue. Considering that we are having issues with our raw material fulfillment, we are going to influence the demand through marketing strategies of the products that can be produced with the current raw materials stock. And bear in mind, it's quite important to say that all our efforts are aimed to increase our local and API sales to offset the losses generated by not meeting all of our customer demands. Now, my colleague Federico is going to take us through the long-term strategies.
Thanks, Ivan. So what do we do in the long term? Well, in the supply side, important data and solid evidence support our reshaping suppliers' landscape strategy. This is aimed to reduce the reliance on China's supply by 30% in the coming years. Right now, the Indian government is supporting a public program on big pharma parks that includes tax exemptions, financial aid up to 90% of the cost of the facility, and up to 6 years tenure, creating a good opportunity to start manufacturing our own supplies. As the construction of a plant in a big pharma park will take a while, we zoom in another market that accounts for having favorable conditions and already has a finished dosage manufacturing facility, Japan. This country has a pharma industry developed already, is recognized for innovation, which support our aim to return to a cost-effective supply chain model, and the aging of their population leads to Japanese government to encourage the production of APIs and generics in the country. A key point here is that the high labor cost that Japan has could partially be offset with innovation and efficiency that the country can bring along the production chain. Now, Ricardo is going to take us through the customer strategy in the long term.
Thank you, Federico. Now, having defined the supply chain strategy, we bring the teaming up with near market strategy to reinforce our long-term relationship with our customers. The main objective is to grow our revenue share in emerging markets such as the Asian region by 17%. This is support on the projected growth that is expected to be around 5% for the coming years. Also, there is an enormous potential on Indian market due to high demand of generic product support for being one of the largest population of the world. In here, we expect to grow our revenue share by 7%. This added to API's market in India that relies on a strong support from the government. On the other hand, APIs represents a potential segment to be developed by Indie Pharma. Our expectations are to increase our presence in Japan by establishing a new API facility and to increase our API production locally. With this, we want to increase our revenue share by 21%, and we can shift our dependence on China supplies at the same time. Okay, Anna, can you give us the conclusion, please?
Thank you, Ricardo. So to sum up, the challenges are clear. high concentration in supplier side and high reliance on one market for sales, being the second one the most critical in terms of revenue impact. But what to do? As Alejandro mentioned before, the action plan defined a set of immediate actions going from in-house, in which we propose to fit the organization to a changing environment by activating a business continuity plan and by creating a crisis committee that assures the urgencies all along the structure. To the external environment, first, with suppliers, by establishing a safety stock model that is for sure more expensive, but reduce the possibilities of a stock out, which is admissible under a resilient, efficient model. And to get a strategic alliance with similar companies of the sector to prevent our shortage. And second, with customers by influencing the demand towards our more available products, spotlighting the most profitable customers and business units. So you may wonder where we go with this plan. Okay, in the short term, our objective is to reduce the expected drop in sales in 2% by building long-term relation with our most profitable customers and preventing the risk of shortage with a resilient, effective supply chain model. With this in mind, in the long term, as mentioned by Ricardo, our aim is to increase in revenue share in Asian market by 17%, in Indian market by 7%, and in API's business unit by 21%. Turning back to a cost-efficient model is expected by increasing the possibilities to produce locally, reducing transport, tax, and production costs, and by taking advantage of the enormous potential in innovation that Japan has. Please feel free to ask any question. We are Buka team, driving to win, driving to excel.
Thank you so much, Buka team. Great job. Excellent work. I'd like to open it up to questions with Mr. Gopi. If you can go ahead and ask your question.
Sure. Thank you, team. That was a great presentation. I have two questions. The first one is you spoke about increasing the contribution of sales from India in the near term, right? Can you speak to what the actions of competitors will be, because they are facing similar challenges and they might potentially have the same response to the pandemic. So how do you propose Indico differentiate itself from its competitors?
Okay, one of our main strategies are alliance with public hospitals all along the Indian territory. And this is also supported with a strategic alliance with other competitors that are not direct competitors for us, but are similar companies that already produce similar products in India, like Aurobindo, Ciplas, or Dr. Reddy's. And with this, our aim is to see if they have the excess of inventory that they have, maybe could be our shortage. So in that sense, we can complement the production of our APIs with the excess of inventory of those companies.
I would like to complement something that Ana Maria just said, and please bear in mind that Indie Pharmaco has a pretty well advantage because they are the leading company in the sector. So it gives us a plus in order to make better negotiation with the companies of the sector, but as well with the government through the spending of the hospital. Everybody knows that in this moment, the whole world is spending a lot of money more in health issues, and we are going to take advantage of that situation using our leading position as the main driver of the strategy.
Thank you. I just want to go back to something Anna mentioned in terms of complementing with other supply, because one portion of your solution also talks about increasing the safety stock that would lead to a 4% decline in margins, right? I don't think that is acceptable in the near term, given all the business challenges that the company is already facing. So you increase stock in a already strained supply chain. I just don't know how this company can achieve that.
Okay, we are still having some sources of the materials that we use for the production of the APIs and generic products. We still have it. We are not going to lose the whole sources. So we are going to use that model in order to have more sources in order to to produce the main important products and the most profitable. We already have access to those products, so going to that kind of supply chain model allowed us to have enough material to produce the products that give us best profits in terms of business units and clients. We don't have that close completely door, so we are going to take advantage of that opportunity using that model.
Thank you so much. Next, we have Mr. Krieger who has a question.
Yes, thank you. And Team VUCA, great job on the presentation. Wanted to ask a quick question about your supply side. I wanted to see if you can elaborate a little bit more on your strategy to diversify into Japan. Japan, I think, is a market that can be a little bit more deliberate with regards to their corporate decision-making. And I wanted to ask if that's a concern for you all, and if you could just elaborate a little bit more on what the risk reward trade-offs are to investing in Japan when trying to source raw materials.
Yes, we were looking a lot of markets to see which one would be the most favorable in order to establish a facility. And we found that in one of the main traits that we could have in Japan is they have a higher labor cost than, for example, the one that India or China has. But we already have a facility in Japan, so we already know the cost structure of our products. On the other hand, we see a lot of benefits to establish the facility in Japan because the government is in words of the health Minister of Japan. They say that they want to grow in APIs and generic in 90% for 2025, and also the aging of their population leads the government to boost the pharmaceutical market in Japan. So they are moving from a market where that is in which the patented drugs leads to a market in which they need generics and APIs in order to produce more affordable products for the older population that is in there. Thank you.
Thank you, team. Next, Professor Saranga has a question.
Yeah, so you talked about using safety stock given the COVID kind of scenario, and there are shortages in APIs because of COVID pandemic. Can you explain what kind of safety stocks would you use if a similar kind of event recurs again? Would you be actually able to compute what are the required safety stocks using the methodology that you have explored so far?
Yes. To calculate, first, we're going to focus, as already mentioned, on the most profitable products and business units. So we are going to identify what are the main products that we need in order to produce that. And we already modeled scenarios of EBITDA, taking into account different levels of revenue and different levels of cost. We already know that it's going to be an expensive strategy for the company, but we must take into account that this is a short-term strategy, and we are willing to move temporarily from a cost-effective model to a resilient effective model. We already know that it's going to be expensive for the company. Our research shows that there is an impact. Actually, our EBITDA margin is 20%. In the case that the revenue keeps in the same level, but the cost of production grows by 30%, we are going to have an impact of 24% in the EBITDA. So it's going to take us in a -4%. But anyway, it's a reasonable scenario if we don't want to lose the market that we already have, and we want to focus on those clients and those business units and those products through the Pareto principle that we already mentioned. So that's going to be a little bit more deeper the strategy on the safety stock model.
Okay, thank you.
Thank you, team VUCA. Unfortunately, at this time, we are out of time, but we'd like to thank you for your excellent presentation. Well, good job done. And real quick, would you mind stop sharing your screen? And if the judges can come on camera, we're going to do a quick screenshot, trying to capture some memories before we end.
Ricardo, can you stop screen sharing, please?
Great.
And all the teams that are there, as well, all the teams, if possible.
Sorry, I am not able to undo my video. I think it is controlled at your end. Okay, thank you.
Great. Okay, taking the screenshot now. Perfect, thank you so much. And we'll also get some more pictures with our final, with our winners. We will be announcing the winners later today at 12:15, but would like to sincerely thank and congratulate all our final 5 teams for the tremendous work that they put into this presentation. It was a job well done. We would also like to thank our judges for being here today. They did an excellent job. We really appreciate all your hard work on this. And I would like to hand it off to Mamuksha, who will carry us on to the next part of our program today.
Thank you, Amanda, Swapnil, Gabriel, and the entire team for putting this together. A big thank you to all the judges for taking the time. Congratulations to all the teams for making it to the final round, and I wish you good luck with the results. We'll announce the results at 12:15. I'm very excited to announce that this year, EMI has also launched its first ever pitch competition. Now announce the results of the case competition. And for that, I would like to invite Soraya and Roberto for the announcements.
Thank you, Mamuksha. So first of all, we want to congratulate all the participating teams. All of the presentations were really good. The strategies proposed were really, really good. And I think for all the judges, it was a really tough decision to make. But well, we have to make decisions. So we're gonna present the results of the case competitions. First, we're gonna present the 3rd place, then the 2nd place, and finally the winner. So first, congratulations to the third finalist, Team Buca from Uniandes. If you want to say something, the floor is yours. You have 1 minute to say whatever you want.
Thank you, Grinnell University. We want also to thanks to our University Los Andes here in Colombia. We thank God and our colleagues for the efforts, and also to all of our colleagues in the MBA of Los Andes. Thank you very much for this opportunity.
Congratulations, thank you so much. Now, for the 2nd place, we want to congratulate Team Titan from Iim Bangalore. If you want to say something, again, the floor is yours.
Hi judges, thank you so much. It's been a really great opportunity for all of us to be able to participate in such a in an event of international standards like the EMI Cornell. So thank you so much for that, and kudos to the organizing team. It has been a really professionally organized competition. So thank you so much for that, and looking forward. Thank you.
Thank you to you. And now I will pass it to Rob for him to announce the winning team of the case competition.
I am sorry, I don't know. You have the scores. You announce it.
Okay.
No, let me say something, because maybe they didn't say. The reason Soraya is making the announcements is because she is part of the team that won last year. So it is her right to make the announcement.
Thank you, Rob. So, well, now I and we all want to congratulate Team Famous 5 from IIM Ahmedabad for winning the case competition. Congratulations for this huge accomplishment. Please, if you want to say something there.
Hi, thank you so much. This is a huge surprise. We weren't expecting this at all. So first, I want to thank the organizing team. I think right from a wonderful case, the sheer amount of research that it would have taken to sort of get the case up and running. Throughout the process, you guys were all very helpful, very accommodating. So thank you so much for your thorough professionalism. We also wanted to thank all the judges for taking the time out for the event. Coming from all over the world across different time zones. We thank you for your difficult and yet enriching questions and inputs. They were extremely helpful. I want to mention that our team had a great time working on the case. We are all in different cities and we were all working online, but it was just so fun working on this interesting case. Thank you so much for having us. It was a great honor to be in the top 5, and now this is an amazing surprise, an amazing honor. Thank you.
No, congratulations. You did a really, really great job. And yeah, again, it was a tough decision, but we thought that you were the best team in this case. Now, I'm gonna pass it over to Mumuksha to continue with the next panel of the conference. Thank you so much.
Thank you, Roberto. Thank you, Soraya, all our judges of the case competition, the team who have worked very hard to put everything together, and of course, the winners. Many congratulations to all the teams. It was a pleasure to have you all. And maybe we want to again have a virtual applause for all the amazing teams.